Ms. Grossman, thank you very much for
thank you.
being here.
I'm Fran Grossman. I'm an Executive Vice President at ShoreBank. I am a grandmother, and actually I did miss my flight, so my grandchildren will...
Did you say something about...
I missed my flight.
But no, but when I asked if does anyone here have a flight...
No, I'd already, there was no way I was going to make it. I'd already taken care
I just want to make sure that I didn't...
When I was going like this, that's what I was doing.
I'm sensitive to people missing flights, so when I ask witnesses to raise their hand if they...
You were wonderful. I just wanted credit for staying.
Well, thank you for... The chair will...
I wasn't subtle enough.
The chair will duly credit the gentlelady from ShoreBank here. Thank you for being here.
I started as I taught school as a librarian, as
We're going to move that mic a little closer.
As a social worker, I worked at Continental Bank and Bank of America, running small business, real estate lending, starting the CDC, raising capital for ShoreBank, wound up at ShoreBank, and I also got my start with Gail Sincata, and I care a lot about the subject. So, I'd like to use, though, my 5 minutes to give you a glimpse of the payday lending industry from our vantage in Chicago, and I'm sorry that Congressman Davis is not here, but I will send it to him, and we speak anyway. About what I'm going to posit is a way that community development banks like ShoreBank could help meet the complicated needs of our customers and members of our neighborhoods who use payday loans. As I said on the phone when we talked about this with your terrific staff person, there are no easy answers. There are no silver bullets. I think I'm not going to go into the horrors of payday lending. I think you've heard enough from others. What has happened in Illinois, and Ms. Fox has this in her prepared testimony, is we have developed regulations that have changed but not eliminated payday lending. These guys are smart, and every time you make a new rule, they're going to figure it out because there's a lot of money involved. As we always say, poor as a vacuum, and they do find the loopholes. A number of things have taken place in Illinois, including an industry-wide cap limiting payday loan principal to 25% of somebody's income. Only 345 days of continued indebtedness before a mandatory debt recovery period. Special protection, which I think we are all interested in for military personnel, including a limit on wage garnishments. And then we do have a statewide reporting system, and we do have fines. It's not perfect, but it's a start and it's an acknowledgement. But it's also important to remember that payday lending fits into a broader set of businesses that provide alternative financial services. And usually they all charge high rates for basic services such as check cashing, bill paying, and the like. ShoreBank is a $2 billion mainstream financial institution that is also a community development bank. We have 39,000, we're a $2 billion bank, we have 39,000 checking accounts. Our largest service area is the Chicago area. We also have branches in Cleveland. We did $7 million in single-family mortgages in Cleveland last year. We've lost market share because we have a fixed-rate product, which means that none of the fancy stuff, we underwrite them ourselves, you either what you see is what you get. But the consumer is bombarded with probably over 300 types of mortgage products today. When you were mayor of Cleveland, there was probably everyone you knew got a mortgage at a bank. Now, everyone you know doesn't get a mortgage at a bank. And so I think what Tommy Fitzgibbons was talking about was very interesting. We also have a $600,000 deposit from the Cuyahoga County Linked Deposit Program. So we're very much, and we're going to talk about doing more business. But that's not in my speech. Our communities, I'm the comedian. Our communities have a median income of just under $30,000. We offer a wide, oh, there's my congressman. We offer a wide range of products from loans to rehab mortgage loans for walk-up rental apartment buildings. these are affordable rental apartment buildings, and they're not subsidized. This is not FHA, this is not Section 8. Well, it could be. It's not Section 8 project-based. It's not low-income housing tax credits. These are mom-and-pop developers who buy a building, we help them get a rehab mortgage, and they charge micro-market rents. We make loans to small businesses. We do a lot of lending to churches and nonprofits, as well as we do many kinds of accounts for individual customers. We're a community development bank, and we meet the strict criteria as a community development bank, which means that we have to make 60% of our loans in low and moderate income communities. But interestingly enough, there are only 52 community development banks nationwide. Some of you may know that the Community Development Financial Institution is a part of Treasury, and it certifies banks, credit unions, venture funds, and nonprofit loan funds, and they do the 60%. Our banks are located in many of the same areas where payday lenders, check cashers, money transmission shops, and those are the remittance shops, and pawn shops. And don't forget about pawn shops, and there's a whole array of people out there who are in what we would call the quick cash business. Payday loan customers care about their customers, and they're often customers of our banks and banks like ours, and they care because they're a constant source of income. We provide many services that these same customers want, and they have to remember the payday people who use paydays have to have a checking account. So we do share many of our customers, but we cannot, though we know we cannot provide for these small unsecured credit. These loans of $500 to $1,000 with no credit, no unsecured, we cannot make them at this point. We don't have the ability. There are some programs, and the reasons are some have to do with issues of pricing and prudent risk management, others have to do with the banking culture and regulatory system, and still others with all of our full understanding of how to effectively and responsibly meet the needs of many community residents. The consultants who work with retail banks tell us that in order for a checking account to be profitable, and that means that it would earn $136 a year for the bank, it has to have approximately $2,000 in it and only one NSF. Now, you could make a lot of money off of the NSF, but that's an equally ugly way to make a living. So that's why I use that number. I think community bankers and community development bankers can help. We are intensely local and truly relationship focused. We are small organizations